Hi everyone, my name is Juliana and I am the producer for the accounting and finance shows in North America. I'd like to welcome you to today's webinar, Support for Small Business in the Era of COVID-19, Evaluating Your Options. We're just going to wait another minute for the room to fill a bit more. All right, it looks like the room is starting to fill. Right now we are at 125 live listeners and growing. So let's just go ahead and get started. All right, so today's event, Support for Small Business in the Era of COVID-19, Evaluating Your Options, is presented by the Accounting and Finance shows. This is the first in a series of webinars that we will produce for finance professionals and business owners. We have partnered with We NYC and New York City Department of Small Business Services today to bring a panel of experts that will help navigate the federal small business stimulus aid programs that have become available under the CARES Act. Without further ado, I'd like to introduce our partner, Greg Bishop, Commissioner of the New York City Department of Small Business Services. As Commissioner, Greg is charged with running a dynamic city agency focused on equity of opportunity that leads to economic self-sufficiency and mobility of New York's diverse communities. Thank you for being with us, Greg.
Thanks, Juliana, and good afternoon, everyone. And as Juliana said, our agency, our focus is really to unlock economic potential and create economic security for all New Yorkers by creating stronger businesses. At this moment, I just want to make sure everyone here is finding themselves and their families well and in good health. And I want to thank everyone for doing their part, which is to stay at home and help stop the spread and flatten the curve. It's clearly a very painful time for our city and our world. We've been impacted by this virus in so many different ways, our personal lives, our work lives, and even in our business community. And I'm thankful for the We NYC team and everyone here who have put this teleconference together so we can talk about what we're doing to help small businesses. Before I jump into that, I just want you to know that if you're in need of any support of any kind, or if you know a New Yorker that's in need of any support of any kind, whether you need to find a healthcare provider, mental health support, food assistance, or anything, or if you'd like to donate your time or other resources to your neighbors, please reach out to 311 or visit nyc.gov/coronavirus, where you can be connected to services. So our purview in New York City is all the small businesses and their employees, and of course everyone has been hit particularly hard. New York City has dealt with disasters in the past, from Hurricane Sandy to 9/11 to even the Flatiron Steam Pipe explosion. However, this is truly unprecedented in its national scale. And I know the pain many business owners and workers feel right now, and we're doing all that we can to weather this health and economic crisis, working with partners at all levels of government to do what's best for New York City. And it's so good to see my partner here at the Small Business Administration that's here on this call as well. So one of the things that we did in immediate weeks of this crisis in New York City, and we saw some of our small businesses being impacted as early as January, was we created programs that would address what we thought was a short-term need. Those programs were designed as a stopgap measure and served as a bridge to the launch of federally funded programs, which we're happy that the federal government opened up their different programs. I know as of this morning that the federal government is no longer, the SBA is no longer accepting applications for their Paycheck Protection Program and the Economic Injury Disaster Loan. However, one of the things I do want to say is that we have positioned our resources. We know that there's going to be a fourth stimulus. We know there's about $250 billion that's being discussed in terms of working on funding some of these programs. So we want to make sure that if you have not already applied, that you're ready. So some of the things that you're going to hear today is how we get you to that point where you're ready, that once these programs reopen, that you can actually take advantage of them. The other thing I wanted to note is that, you know, it is every day, and as I just mentioned, when we planned this this conference, you know, the PPP was up and running, and dollars were being dispersed, and in just literally 24 hours, 48 hours, things have changed. That will continue throughout this pandemic. One day we will plan for, you know, the next month, and by the end of the week, it's totally different. We saw that with the programs that we launched at first, and a week later was a new dynamic. So things are moving fast, and I know that everyone has an urgent need to figure out where they're going to get the source of capital. But I want everyone to be very cautious. We're seeing a large increase in fraud. So if you're getting emails from unknown individuals, please do not click on those links. And then certainly, unless you're going to a website that has a .gov at the end of it, and just be careful, because there are websites representing and claiming to be the government and can help you with state and local programs when they're not. So I just want to make sure that you are aware of that. Again, I just want to, you know, thank you for being here. You know, the City of New York is here to help you, your family, and your community through this crisis. And in times like this, I'm even more prouder than ever to lead a public agency like SBS. It's a home where we're innovating. We're creating essential programs like Women Entrepreneurs of New York City, or WeNYC, which has convened the event today. And WeNYC is the official initiative of the City of New York to support and empower women entrepreneurs. And though we can't see each other in person, we hope that you join us at one of our digital workshops and conferences designed to help your business grow stronger and more resilient. You can learn more about WeNYC programs at we.nyc. I want to thank our partner, Terrapinn, for making this event happen on such short notice, and to our speakers, especially our moderator, Ramona Cedeno, who I'd like to introduce next. Ramona is the founder and CEO of FiBrick Financial Services, an accounting, outsourcing, and tax planning firm working primarily with tech startups to help them build sound accounting and finance processes that support operational and strategic goals. Ramona has been instrumental to WeNYC as a mentor since 2017, and with over 15 years of experience as a financial controller for large and small companies, she's a perfect person to moderate this panel. Welcome, Ramona.
Thank you, Greg. Thank you so much for taking time to be here with us today. And thank you to the rest of the panelists. We'll talk about everyone in a second, but I really appreciate this opportunity. Terrapinn, thank you so much for putting this together. We have been hosting different events by different organizations, and there is always a big need for information. So it's great that you guys put this together so quickly and so well organized, and that you are able to secure Greg, Michael, and Peter for today's event. I would like to introduce our next panel, the other two panelists. I'll start with Peter Fennel, who is a supervisory economic development specialist and veteran business outreach officer as the U.S. Business Administration, Small Business Administration. And Peter brings over 20 years of leadership experience in the public and private sectors to his role leading the New York District's Economic Development Team. He served as the Long Island branch manager for the SBA's New York District office before joining the Economic Development Team. Thank you, Peter, for taking time out of your super busy schedule, as you can imagine, to be here with us today, sharing some information with our business owners in the city and across. Michael Andriola is a partner at PKF O'Connor Davis, and his company ranks as one of the top 50 public accounting firms in the US. Michael has over 15 years of accounting, auditing, and business advisory experience on the executive level. As an engagement partner, he serves clients in a variety of industries, and he's skilled in generally accepted accounting principles and managerial practices and procedures. Mike plans and executes clients' engagements, including financial analysis and reporting, auditing, internal controls, budgeting, and strategic planning. So with Michael, Peter, and Greg, we have an excellent panel today to answer some of your questions, share information, and you have the opportunity to ask questions in the chat, and we'll pass on the questions to the panelists and answer as many as we can. I'm a small business owner myself, so I know what we are all going through. This has been very difficult times, and it's a relief to see that the city, New York City, and the federal government have jumped in to help us through this crisis. And before we continue, we would like to poll the audience about some of the CARES Act programs that have been provisioned, and I know that some of them stopped taking applications, as Greg mentioned before. But the programs that the CARES Act brought to small business owners included the Paycheck Protection Program loan, the Economic Injury Disaster loan, the grant advance from the Economic Injury Disaster loan, and the Express Bridge loan. And we would like to know, from the audience, which one of these programs did you apply to? If you can, we'll have a few seconds for you to respond, and we'll read the results to you right after. So if you can go ahead and select which one you have applied to, that would be great. How's everyone doing? Are you all answering? We want to see very good numbers there. Great, okay. Wow, the first two are kind of, oh, okay, great, that's what I expected. So the Paycheck Protection Program has 57% of the audience have applied to it, so that's great. And then the EIDL has 42%. And it seems like we have some overlap, which means that a lot of you have applied to have taken advantage of that advance, which is what we would have liked to see, of course. So great, thank you for sharing. Now that 27% that did not apply, hopefully is that either you didn't qualify or chose not to apply. But if you wanted to apply, like Greg said, be on the lookout for future opportunities for you to participate and get ready for that. Thank you. Thank you for participating. So I'm going to start with Peter, and I would like for Peter to talk to us about the programs that the CARES Act made available for business owners. And yes, Peter, go ahead and share with us some of the information that you have.
Thank you very much, Ramona. You know, good afternoon. I really appreciate this opportunity. And I wanted to mention that, as Greg said, additional funding is on its way. They're working on it in Congress. And to date, in the last 14 days, the SBA has done what 14 years worth of SBA lending, okay, has occurred in the last 14 days. It's absolutely amazing. Those of you who have applied and are receiving the funds, you know, this is awesome. Get the businesses up and going again. Those of you who have not applied yet, please, you know, get ready to apply, as Greg had said. Prepare. And for everybody out there, please reach out to your local congressional representative and tell them we need the extra funding. We need them to continue to fund the Economic Injury Disaster Loan and the Paycheck Protection Program specifically. It's needed for our businesses to get everybody up and going again. Okay, with that, I'm going to go through the some attributes of each of our programs out there, what we have for you. So the Economic Injury Disaster Loan, the Eligibility, self-employed individuals, independent contractors, sole proprietors and businesses, tribal business concerned ESOPs, cooperatives, and private 501c3s, nonprofits with 500 or fewer employees. The application on this runs through 12/31/20. The loan amount is up to $2 million. Term is 30 years. Interest rate for profit business is 3.75%. For nonprofits is 2.75%. Proceeds may be used for working capital, including payroll costs, salaries, and sick leave, rent or mortgage payments, material costs, pre-existing debts. Okay. Unsecured up to $25,000. Loans over $25,000 will need to give the SBA access to collateral. That does not mean that you need to have your loan fully collateralized, but if you have collateral, it will be used. There are no personal guarantees for loan amounts up to $200,000. Deferred for 1 year. Interest will continue to occur over that period of time. You apply for this directly through the SBA. The SBA is a lender, and it will be sba.gov/disaster. Okay. Then for the advance, it's the same application. After the CARES Act was passed on and they implemented the new streamlined application process is set up. And so you had to apply from March 30th to access the advance here. But the same eligibility, you apply through the SBA at sba.gov/disaster. The advance is up to $10,000. The advance is forgiven. Proceeds may be used for working capital, including payroll costs, salaries, and sick leave, rent or mortgage payments, material costs, or pre-existing debt. Applicants should not be required to repay the advance, even if denied the economic injury disaster loan. Okay, the turnaround is supposed to be about 3 weeks. Once you've applied, you finish your application online, you would get a number there, and approximately 3 weeks later, the SBA reaches out to you for additional information. And at that point, approximately 3 days later, the advance is to be wired into your bank account. There are no fees, and this is available again through December 31st. So now we're at the Express Bridge loan. Any business in operation before March 13th is eligible that has fewer than 500 employees, otherwise meets SBA's existing size standards, and credit is not available elsewhere. Lender, you apply through this to certified SBA lenders, your banks, your credit unions, express lenders. It is available through September 13th, 2020, and may be repaid in full or part by the economic injury disaster loan. And the reason for that is the concept is you would apply for the economic injury disaster loan, receive the advance, you apply for the Express Bridge loan at the same time, you're receiving the Express Bridge loan up to $25,000, you're receiving the advance on the economic injury disaster loan, that $35,000 to help you get through until the time when the you receive the funding for the economic injury disaster loan. So the application deadline runs through 9/13/20. Loan amount up to $25,000. Term is to 7 years. Must be structured as a term loan, not a revolving line of credit. Interest rate not to exceed prime plus 6.5%, fixed or variable. Now, what this is the SBA sets a ceiling for the lenders to charge. The lenders cannot charge more than this amount, prime plus 6.5%. They can charge less, but not more. Proceeds may be used for working capital, including to cover operational expenses, support their survival and reopening of their business, payroll costs, salaries, and sick leave, rent or mortgage payments, material costs, pre-existing debt. There's no security collateral, no personal guarantees, no payment deferrals for this. Borrowers may obtain only one Express Bridge loan and will be repaid in full or partially by the proceeds of the economic injury disaster loan. Again, there's no security collateral. Okay, that's so the fees, upfront fees, there's not more than 2% of the guaranteed portion of the loan, maximum $500. Annual service fees, not more than 0.55% of the outstanding balance of the guaranteed portion of the loan. Application fee, the greater of 2% of the loan, above or loan amount or $250. Late payment fees not to exceed 5% of the scheduled payment. Okay, the Paycheck Protection Program. Eligibility, self-employed individuals, independent contractors, sole proprietors, and businesses, tribal business concerns, and private 501c3 nonprofits with 500 or fewer employees. Businesses in certain industries can have more than 500 employees if they meet applicable SBA employee base size standards. Affiliation standards are waived for small businesses. In the hotel and food service industry, franchises in the SBA franchise directory, and businesses that have received financial assistance from small business investment companies licensed by the SBA. The lender for this is the SBA certified lending partners, your banks and credit unions. And okay, the application runs through June 30th, 20. Loans amount up to $10 million. Eligible payroll costs do not include compensation above $100,000 in wages. Okay, 2 years term, interest rate 1%. Proceeds may be used for working capital, including payroll costs, salaries, benefits, including sick leave, medical leave, insurance premium, rent or mortgage payments, pre-existing debt payments in place before February 15th. Okay, the amount, 250% of the average monthly payroll for the past year, capped at $100,000 per employee, up to a maximum of $10 million. The interest rate is 1%. No security or collateral. Personal guarantees are waived. The payment on this is deferred for 6 months. Interest will continue to accrue over this period. Turnaround, once you've applied, you should hear from your financial institution in 2 to 3 weeks. And the forgiveness portion of this, we have a 75% rule. So 75% of the forgiven amount must be spent on payroll. 25% of the forgiven amount will be spent on interest on mortgages, rent payments, and utilities. Any advanced amount received under the Economic Injury Disaster Loan Program will be subtracted from the forgiven amount. And loan forgiveness is not treated as taxable income, and there's no fees. The loan is available again through June 30th, and the application, it's already been fully opened and funded. And now we need to reach out to Congress and ask them to continue to fund these programs to help our small businesses. Okay, and then the Small Business Debt Relief Program. Eligibility is current SBA borrowers, so those who had SBA 7A loans, not under the Paycheck Protection Program, 504 loans, microloans existing prior to the disaster declaration, or the existing SBA borrowers. These people borrowed through businesses, took out these loans through certified SBA lending partners, the banks and credit union. And to apply, it's automatic. You should check, of course, with your lender, the bank. And what the SBA is doing for 6 months is the SBA will cover all loan payments on these SBA loans, including principal, interest, and fees for 6 months. And so this will run through September 27th. And this is to support the survival and reopening of businesses. And not including this is of course, the Paycheck Protection Program and SBA disaster loans. Okay, so then existing SBA disaster loans, deferment is automatic, and payments are automatically deferred through December 31st, 2020. The next payment will be in January of 2021, and interest will continue to accrue over this period. But these are the programs, what the SBA has laid out there through congressional acts and stuff to support the small businesses. And as Greg said, we need to reach out to our congressional representatives and ask them to continue to fund these programs to help, the people to the reopening and survival of our small businesses. Thank you.
Thank you, Peter. That was really useful information. I have to say, I applied for all the loans that were available, so I'm hoping to hear back soon. I have a couple of follow-ups questions for you based on what you shared. And we have seen a lot of this information many times, but questions come up all the time, which seems to require clarification. So one question I have, and if you don't have, if you don't have the answer right now, you can skip it. But since the EIDL grant is deducted from the forgiving amount of the PPP, is there any advantage in applying for both unless the business owner is just looking for extra capital?
Okay, so you cannot have economic injury disaster loan and a paycheck protection program loan out for the same reason. You can have both out, but they have to be for different reasons. The paycheck protection program provides forgiveness for your payroll. So 75% of what is forgiven, this is our 75%, will be what is spent on payroll. So they're awarded, so the business receives the loan, and then it's drawdown. So they draw, okay, we have upcoming payroll, we need to draw money from and cover payroll. And this is just following up on all the information, background information that the business has provided to the bank about their employees, about their payroll, and following through. So they're so 75% for payroll and 25% for your mortgage or rent, and well, mortgage interest and rent and utilities. So all of their operational expenses, if you could push those off over onto an EIDL loan and be running that, so you wouldn't have a pretty much almost reduce, if not, minimize any loan that you would have with a paycheck protection program, because it's yes, it's 1%, but it's 2 years is a short term, and the EIDL can go as long as 30 years in the payment terms. So if you could separate your operational expenses to match up with what is forgiven, it would really help the businesses out there.
Okay, that makes sense. And you went through the you explained to us how a business owner can apply for the PPP, which is through lending institutions, and for the EIDL is through the SBA. But can you give us some information around what is the role in this process of the financial institutions compared to the SBA, and then what can the business owners do to kind of make this process as smoothly as possible? And I know I'm going to ask some questions to Peter about similar question around the business owner, so you can keep yours very high level. But yes, what is the role of the financial institutions and SBA when it comes to the PPP loan?
Okay, so when it comes to the Paycheck Protection Program, it's all the financial institution. The SBA has, Congress authorized us. We've set it up, went through, and it took us about a week to get it set up in the background, and then another week, 10 days for the financial institutions to get it up and running. And it started with SBA lenders, and they're used to doing SBA 7A loans. Okay, and that's what this is. And they have delegated authority to process the whole loan completely by themselves. They know the documentation, the additional documentation the SBA requires, and they constantly, on a daily basis, year in and year out, process this paperwork. So there's just a couple additional documentations that's definitely required on this. I believe the IRS Form 941, quarterly wages, and 944 annual wage report, and some additional information then would be normally asked, but it's really all with the financial institution. I will say that from what I understand, both the SBA and the commercial lenders with the PPP, once you've applied, you really aren't going to hear back from them or be able to identify the status of your loan until you finally hear back from about roughly 3 weeks later. There's no ability, from what I've understood, to identify where, at what point is your loan? Is there anything you need to address or anything, to track the progress of it?
Thank you, Peter. And to the audience, if you have any questions, if you have questions for Peter, you can send them through the chat, and then we'll ask them at the end of the panelist questions. So let's move on to Greg. Greg, again, so happy to have you here. When the pandemic started, the city of New York moved very swiftly to provide assistance to business owners that were impacted by COVID-19. And there were programs like the Employee Retention Grant and the Small Business Continuity Loans that were that were deployed to the community in New York City, and I was really happy to see that. And of course, you guys typically respond very quickly and support our community in very big ways. So I have a few questions. I know you gave us some information, but I'd like to ask you some questions around what the city is doing to help the business owners today after these programs were kind of moved out, discontinued to give ways to the CARES Act. How is the city, how is the agency providing assistance to help New York City businesses to access the federal funds? And I know you were doing a lot over the last few weeks, but if you can expand on that, that would be very helpful.
Yeah, and to Peter's point, we are also facing the same challenges in terms of there are businesses that applied to our grant. We sunsetted our grant program when the Paycheck Protection Program came online about 2 weeks ago. That particular day, we received almost the same amount of applications received in the length of time that we had the grant application. We are still processing those applications. If businesses have questions, they can send an email to covid19biz@sbs.nyc.gov. However, we are having extreme volume, and it's taking us some time to process those applications. Our loan program, and so far we've dispersed in our grant program over $10 million, and we continued and will continue to have more disbursements. Our loan program, we started with a $22 million fund. We've dispersed over $4 million, and we continue to process applications on a first come, first served basis. What we're doing in addition to that is positioning our teams to provide additional technical assistance. The most important thing in what we're seeing, based on the applicants for our program, what we're seeing is that there are some businesses that need additional technical support to understand, like some of the documentation that Peter was just reviewing. What does that mean? What does that look like? So we have our entire NYC Business Solutions apparatus working remotely, and also our Workforce One Center is working remotely, but they are available to help. So if individuals go to nyc.gov/COVID19biz, they can request assistance. They can see a sample PPP application, for example. They can find, once the application reopens, they can find lenders that are participating. So our experts are available not only to help you understand the programs that are available right now, but we also can help you find additional financing. For example, last year we announced our We Credit program where individual women entrepreneurs can get a line of credit. That's still, that application is still up and running. Our finance account managers last year connected businesses to over $76 million in capital. There are lenders out there, CDFIs and smaller community banks, that are still opening up new lines of capital. So it may not be related to disaster, and when I say related to disaster capital, which is oftentimes cheaper, but we can help you find alternative sources of capital. We are also helping businesses find employees. There are some businesses right now we're working with over 150 employers who are looking for who have 1,600 positions open across the city. A lot of it is in the essential services, but we're actually helping those businesses staff up based on the new demand that they have. So there's a number of things that we're doing in terms of outreach, et cetera. We're also focusing a lot on rent challenges and legal support. So we've expanded our legal support. So if you have questions about your lease, need to negotiate with your landlord, the most important thing, and I'm happy Peter touched on the debt relief that the SBA has, but a lot of banks, if you have, if your landlord has a mortgage or you have a mortgage, you can call them, and they are doing 90-day deferrals. So we're asking and we're telling and advising all our businesses to be more proactive and contact your creditors because you may actually get the relief that you need just by discussing with your creditors, and that includes your landlord. And if you need assistance in terms of how to negotiate with your landlord, we will provide you that free legal assistance. The other thing I want to also make a plug on is the fact that we know that some of you may have business interruption insurance, and there may be a clause in there that says virus or bacteria makes the claim exempt from that claim. But we've partnered with our city bar to actually help provide legal assistance to small business to help them navigate their insurance-related claims and contracts. So if you need assistance with that, you can go to citybarjusticecenter.org or you can call 212-382-6633 and get help in terms of looking at your policy and figure out the best strategy in terms of filing a business interruption claim.
Thank you, Greg. Thank you for sharing that, and also for leading the efforts to deploy those programs to the small business community here in New York City. Is the agency doing anything special to assist minorities and underserved communities that have difficulty accessing the relief programs? I personally worry about that community that doesn't speak English in the Latin community, but speak to any programs to any of the minority groups or underserved groups.
Yeah, so that is one of our concerns as well. There's a number of groups, and New York City, we're such a diverse city. Almost 40% of our businesses are owned by someone who was foreign born, so not born in the United States. So what we want to do is make sure that we work with our partners, the Mayor's Office of Immigrant Affairs, the Human Rights Commission. There's so many different agencies that we're all working together to make sure this information gets into our immigrant communities and also our communities where we have a strong representation of minority and women-owned businesses. We're providing these services, and we have the language capacity in our support teams. We have language capabilities in Spanish, Chinese, Russian, French Creole, German. We have information written in the most common languages. So that includes like Arabic and simplified and traditional Chinese and French and Vietnamese, et cetera. So we have a long list. If you go on our website, you'll see the information that's available. And then, of course, I have a call with a lot of our community partners that have tentacles within those communities to let them know when there are changes, when there are additions, and help them provide the technical assistance to our immigrant communities. We're going to be rolling out a more aggressive outreach strategy in the next week or so to prepare for the next tranche of money to make sure that our smaller businesses in our immigrant communities are aware. And I've been advocating for our community banks and our CDFIs to also be part of that solution, because I know that they're the ones that have the connection to those communities. So we want to make sure that we are using the network that's there, similar to how we used the infrastructure of lenders. We now need to go a little bit deeper and use the infrastructure of our community banks and our CDFIs.
Thank you. I'm glad you mentioned the awareness efforts that you're putting together, because I find it painful sometimes when I hear business owners that don't know about the programs that you guys offer, and it's disappointing that you guys have so many good programs. I had my company for 5 years, and I have been using all the resources that you guys deploy. And as a mentor, I have access to them firsthand. So I'm in a good position. But do you find that the community doesn't know enough about what the agency is doing? And in addition to what you're doing with the lenders and other community groups, what else are you doing to bring more awareness to these programs that are so useful to business owners?
Yeah, so and I do find that our community, a lot of communities may not be aware, and especially in this time where everyone, time is of the essence. So just clearly, as you saw, and what Peter talked about, and I think that's one of the things that folks, on this call, the federal government is not known for speed, and within literally a week of signing legislation, here you have an agency that has stood up a program, but then in 2 weeks the money is done. Right, so we have to make sure that our businesses are prepared for the next tranche. So we've started, we've actually redirected all our marketing campaigns to make sure that it's related to COVID business assistance. We've been working with our partners. We have PSAs that's running on a lot of the urban stations here in New York City. This morning I was on the Breakfast Club, for example, to talk about the resources that we have available. And of course, we are going to look at where we have tentacles. So we have contracts with partners right now, and their job is to do events. And right now, events are taking a different type of look and feel. So how can we repurpose what they're doing to provide that one-on-one technical assistance to businesses? One of the other communities that we did not talk about is our undocumented entrepreneurs. And that is one of the things that we're going to have to rely on our philanthropic sector to help provide the capital that we need to help undocumented individuals, entrepreneurs, weather this storm. So there are other groups, informal businesses. There are business owners who commingle their funds, and I know Michael may talk about some of this later on, where they use their personal bank account to have their business income coming in. And of course, that just negated, they couldn't participate in the PPP. So, getting business owners to understand how to structurally present your business and get ready for the next tranche of stimulus packages is going to be important. I'm going to advocate for more because I don't think it's, a next round of stimulus is going to be enough. This is going to be a long haul. I'm projecting between 12 and 18 months in terms of us getting to a point where people will feel comfortable going out and where we'll see a return to normal commerce. So therefore, the federal government needs to be in it in the long haul.
Thank you. That all makes sense. We're getting a ton of questions. I don't think we're going to be able to get to all of them today. We wanted to let the audience know that we'll try to get to some questions, but if we don't get to them, we'll make a big effort to get back to you in some form with those questions that seem to be more present. So hopefully you'll get all the information that you need between now and those follow-up emails. Thank you, Greg, so much, and we'll be back in a little bit with you. I know you might have to end a little early today because you have to do a town hall. So I'll let you go in a little bit. Don't go yet. We'll keep you as long as we can, just in case. Thank you, Michael. So we are in similar industries, in the same industry actually, and I can only imagine what you have gone through with supporting your clients. I know, I've been there, and it was a challenge for me at the beginning when the CARES Act first came out. I had to do a crash course on CARE Act learning, so I'm sure that you guys went through a little bit of that. But what advice can you give the small business owners that are listening to us today in terms of getting ready to apply for one of these loans that the CARES Act has, and any of the future financing options that might come out?
Yes, Ramona, thank you. I will say that it was a rainy Saturday when the CARES Act just came out, and I sat here in front of my computer and read all 880 pages. And then, even after reading them and taking notes and making an outline, you would get all these subsequent revisions, and things that are written in the CARES Act now got superseded by clarifications and updates and so on and so forth. So, some of that detailed outlining didn't necessarily pay off from a definition standpoint, but it at least gave me an outline to go back to the CARES Act and, research further when I needed to. One thing I would say is that these monies aren't a luxury. These monies are a necessity. They're needed in order to keep these businesses running and to keep people paid. So I know it's going to be frustrating to people that have applications in and people that are going to be submitting applications, but I would stay the course. Keep getting your documentation ready, and keep operating with the intent that you will be able to receive these monies. I mean, if you look at the risk and reward, so you sacrifice a few hours trying to get your records together and contacting your bank and getting through the process, your potential reward is getting funded. If you get frustrated and you decide not to go through the process, well, your risk is that you're going to lose out potentially on subsequent funding sources that become available. So in order to stay the course and prepare for this, I would try to gather your financial information. If you use a payroll provider like an ADP, they've made a lot of reports available through a portal where it'll give you your payroll records for 2019. And they'll give you the 941s that are going to support your gross pay. And then, pulling together your health insurance records and pulling together your retirement contributions or state and local tax information. Just trying to take whatever information you're using to complete your application and have some kind of underlying support for that data is going to make your interaction with your loan officer the most efficient and the most streamlined in order for you guys to be on the same page. And if you are a sole proprietor and you don't necessarily have payroll, pay attention to your Schedule C that you have as part of your 1040. That's really going to be the roadmap that you're going to use in order to submit your application.
Sorry,
Ramona, we can't hear you.
I had to hear myself. As I was saying to Michael that I experienced the same thing where clients weren't on payroll when they should have, when they could have been or should have been, and now this is a challenge for them as they try to apply for this loan. So I know exactly what you're referring to. I know that Peter said it before that both loans have you know, in some cases, up to a certain amount don't have personal guarantee. But have you come across clients that are concerned about their credit scores or the credit history as they decide to apply to these loans? And do you believe that this will impact them in any way?
So the answer to that is no credit, no problem. There's really not a credit requirement in order to receive the funding. There's really two main affirmations that you have to be comfortable with making. Then there's a couple other smaller, criteria, but the two main affirmations you have to be comfortable in making, especially in applying for the PPP loan, are that number one, due to the uncertainty in the current economy, that you feel this loan is necessary to continue to operate your business. And number two, that you intend on using the proceeds for eligible costs, meaning payroll, and then your rent, utilities, and other eligible costs that are defined in the program. You don't need personal guarantees. You don't need credit scores. Those are the two affirmations that you really need to be sure you're comfortable with, and the rest of the process, should run pretty smoothly.
Very good. And then so you mentioned that those clients that weren't on payroll and maybe didn't have a Schedule C that will show enough income. And this question is related to that. But what advice would you give someone who today doesn't have those records, like someone from maybe let's say a bodega owner, a nail salon, they don't even know how to prepare some of these reports. What feedback do you have for them?
Sure. I mean, a lot of people are good at running the business, but they're not accountants, and they're not expected to be accountants. That's why you have some kind of trusted advisor. I would imagine those same people aren't preparing their own tax returns. They probably have an outsourced CFO or a bookkeeper or an accountant that they rely on in order to pull that information together come tax time. So to the extent you don't have a Schedule C developed, there must have been some kind of information that you were giving to your bookkeeper, to your accountant, to your advisor that will help you prepare that Schedule C. And that's kind of the end goal. You're as a sole proprietor, your loan amount is really going to be calculated based on the information that's provided in your Schedule C. So gather your bank accounts, gather your checkbook information, maybe look at a QuickBooks file, maybe it's an Excel spreadsheet. Whatever you have that you would traditionally bring to your advisor to help you prepare your taxes, that's the information you should try to get a handle on now in anticipation of preparing that 2019 Schedule C to support your loan application.
Thank you, Michael. And this question has been in my mind for a little bit. Do you, and it could be to Peter or you, do you think it's possible? It is possible, but I don't even know how to say this. But is it possible that banks will prioritize their larger clients rather than the small clients that are just like the bodega owners or those solopreneurs that don't have high payroll or net income to show for a loan?
Is it possible? Well, like you said, anything's possible. And a lot of banks in the beginning were only accepting applications for their own customers. So even more so from a dollars or size perspective, I think it was a loyalty kind of preferential treatment in the beginning, where banks were taking care of their customers first. And in a lot of cases, they were sending invitations out to their customers. You couldn't apply on your own. You could be invited to apply with certain institutions. So of course there could be that situation, but you know, a lot of it also says first come, first serve when you read the literature. And as long as you get your loan in the queue, you are giving yourself the best opportunity to get funded. I mean, we can only control the things that are at our discretion. We can't control how a bank or a third party is going to operate. But in order to maximize our chances, get the information in, make sure it's accurate, make sure your supporting documentation is there, and by doing so, you'll prevent the opportunity for some of these hiccups to occur.
Great.
I
Thank you
also
so
want
much. Go,
Yeah,
Peter.
I'd like to also contribute. Remember that we're dealing with SBA size standards for the business. So any of the businesses, as far as being there, it wouldn't be any of the very large businesses, okay, that involved. And I would just like to mention one other thing, following up a little bit of what Greg was saying, is that businesses should be reaching out, okay, with the SBA. We have our mentors, our business counselors with SCORE, the Small Business Development Centers, the Women Business Centers, and the Veteran Business Outreach Center for veterans. And Greg has his Small Business Services centers there. To reach out to these business advisors and counselors to help plan on how to reopen their business or how to continue going with their business. Because as Michael was saying also, there's, you know, the environment's going to be different going forward. And how do we open the business in this new environment? If we need more spacing between tables in a restaurant, what do you have to do to be profitable? You know, to maintain your profit margins and everything. So there's needs to be a lot of planning, and we have some fabulous resources with the SBS and the SBA that are of no charge to people to utilize.
Thank you, Peter, and thank you, Michael. I know the commissioner has to leave soon, so do you have time to answer one or two questions, Greg, or do you, from the audience, if we have them? I think you're muted. Juliana, can you unmute Greg?
There we go. Yeah, I think I have time for one more question, and then I have to jump to another town hall with our Bronx elected officials.
Oh, thank you. Do we have any questions for Greg specifically, Juliana? I can't see them, but if you have anything that is directed to the city, let's share with Greg. Okay, let me see. Yes. So this is a question for you, Greg, and whatever you're not ready to, you know, because we don't have all the information all the time on hand, but I have a client who is a business owner but doesn't have a social security number, only an ITIN, and no revenue at all. But what would you recommend for this person in terms of resources available to them?
Yeah, so I think you know, for that particular, because it's so specific, that they should contact us and speak to one of our financial account managers. You know, we have other lenders that we work with. There are CDFIs who work, for example, with immigrant entrepreneurs who may not have a social security number, but they are micro lenders. So they lend less than $10,000. And if that's the capital that you're looking for, we can certainly help you. Or if we just need to help you strategize on how to actually, you know, formalize your business, how to take advantage of some of the courses that we have actually moved everything online. So we have a couple webinars, especially for marketing, social media, how to build an e-commerce strategy. So for those type of requests, you can just go to nyc.gov/SBS, which is our website, and then click on a business, and then you'll see the link to request information, or you can call 311 and get connected directly to a business advisor.
Thank you, thank you. So we thank you very much, Commissioner Greg Bishop, for being here. And
thank you.
If we don't have more, you are free to go anytime you want. We forgive you. You have a busy schedule, and I appreciate the time that you give.
But thank you, Peter. Thank you, Michael, for being part of this. And Ramona, of course, thanks for moderating. And please remember for everyone to stay safe. We're all in this together, and we'll all come out of this much stronger as a city, as a nation as a whole. Thank you very much, and have a great afternoon.
Thank you.
Thank you.
So Michael, Peter, to follow up on that question that we had earlier, this is something that has come up, and I believe there is some clarification around it, but it has come up recently a couple of times within my community. When a business company is owned by a foreign entity, 100% owned by a foreign shareholder, are there any restrictions there for them to apply for some of these programs?
Right. So the guidance I've received on foreign ownership of the business, that in applying for the Paycheck Protection Program, that the payroll is only for the U.S. and U.S. resident employees employed by the company. So when they're submitting the payroll information and everything, it's just solely based on the employees in the United States, U.S. citizen, U.S. residents in that business.
Okay, thank you. Thank you for that. So to the audience, another piece of information that I wanted to share is that any question that you have for Greg now that he left, there is a lot of information that's going to be available on the SBS website. We will share that the website with you via email, so you can go and find answers to some of the questions that you were not able to ask Greg earlier. Let's see if we have any other questions. Okay, I believe, I don't know if this one is going to, if we have the answer yet, but what someone is asking, now that the SBA loans are not accepting applications anymore, when are they expected to reopen loan applications?
Again, please, Greg mentioned they're going back. They're working on the continuing funding, but reach out to your local congressional representative, encourage them to get the funding specific, for the Paycheck Protection Program, for the Economic Injury Disaster Loan Advance, that they, we just need to refund those programs and keep moving forward.
Okay, great. I'm just looking to see if we have any more questions. How do we ensure that we receive the PPP forgiveness? I actually want to know the answer to that.
What we've, what I have about that is simply, I understand the Paycheck Protection Program. It's disbursements, for your needs. The money's being dispersed from the total loan amount, and with that, prior to the ending of the 6-month deferment period, the financial institution informs you of what is forgiven and what is not, but it's based on your the disbursements and how you've been identifying the uses of the funds as you've been taking the disbursements.
So I would just add to that. As soon as the money comes into your account, that starts day one. You have the first 8 weeks after that money is dispersed in order to spend these eligible costs. And a little kind of helpful hint, or a best practice possibly, would be to set up a separate bank account for your PPP monies and only charge your eligible expenses to that account. So you actually have a trail. You actually have support for how you're spending your money. Keep in mind that 75% of those eligible funds have to be spent on payroll. The other 25% can be spent on utilities and rent and interest on indebtedness. But you need to make sure that you're spending 75% of that money on payroll costs. And any individual that you're paying, you cannot reduce their payroll, their salary compensation, by more than 25%. And people over 100,000 are excluded from that. But people under 100,000, you can't cut their pay by more than 25%. Then you start running into jeopardizing converting your loan to a grant.
Is it that people over 100,000 are excluded, or the amount over 100,000 of the salary is excluded?
I meant more so if you were to reduce an individual that made over $100,000 by more than 25%, you would not be subjecting your eligibility requirements to exclusion. So you're right. The first $100,000 of a person's salary is what gets included for this forgiveness. But when you're talking about reducing people's salaries, the key is if they make under 100, you can't cut them by more than 25%. If they're over 100, then it's a different story.
Okay, that makes total sense. And someone was actually asking the question to SBA, the same question that you answered about separating the bank accounts. So I think that's very good advice. That's just good practice to do. It wouldn't be mandatory, but it would be a good thing to do to keep track of expenses separately, right? And Peter, you went over this before, but someone is asking this question again. Is about can you use the EIDL and the forgiveness? Can they overlap? And if you can cover that again, that would be great.
Exactly. You cannot have both loans for the same purpose. So you can have the Paycheck Protection Program, and you can have the Economic Injury Disaster Loan, as long as the proceeds for those loans are not being used for the same purpose. In other words, the items which are forgiven in the Paycheck Protection Program, your payroll, mortgage, rent, utilities, keep that in that bank account. Keep that, as Michael just said, keep that separate over there, and you focus on and you identify the uses of the Economic Injury Disaster Loan or other operating expenses for your business.
Okay, thank you. And Peter, another question came in. If a bank is rejected, if a business owner or the business is rejected by a bank on one of the applications of PPP, can they appeal? Can they go to a different bank? Who is rejecting them? Is it the bank or the SBA? And what are the options after that?
Okay, the process is with the financial institution, not with the SBA, and I do not know the appeal. Michael, do you know what they would be able to do?
Well, what I would say is the rules are the same. It's applying to the SBA for funding. So some banks weren't necessarily rejecting the application because the applicant didn't qualify. Some banks weren't necessarily accepting an application because either they had limited capacity, limited resources, limited funding. So if you're confident that your fact pattern allows you to qualify for the program, I would apply to another bank, because they're probably, it might be a volume, it might be a resource issue at that particular institution. But if you're confident you qualify, you could try another institution. Reaching out to that same bank, I don't know how far you're going to get, just from a realistic standpoint, but applying to another bank wouldn't be prohibited.
But you have to, not at the same time, but once the first one denies you, then you can apply to the second one. Is that what you're suggesting?
Right, you can't have two loans out there. You can only have one loan. But it doesn't mean that your application can't be kind of in process and then you don't accept both loans. You only can get one loan though, one loan per TIN, per tax identification number.
Got it. Okay, thank you very much. This question is for Peter, and it's actually a very good question. I hadn't thought about this, but someone is asking which loans can you use to pay IRS debt, and that wasn't one of the listed expenses in the loans, I think.
Okay. You can use it, a monthly payments on a debt, but the loans cannot be used to pay off debt. Like the standard monthly payments they can be used for, but on existing debt before, I think, February 15th. But to completely pay off a debt, no, that is not allowed with these loans.
Who is the compliance? Who is going to handle the compliance of the debt of the expenses? So who do we go to show that our operating expenses are valid to get the forgiveness? Is that with the bank?
Yes,
Michael, do you know?
Yes, it's your loan officer. You submit your documentation to the loan officer. So what happens is, once you get past your 8-week period, you then apply to your bank, to your loan officer, for forgiveness. You submit your supporting documentation, and then Peter, you can correct me if I'm wrong, but I believe they have 90 days to then make a decision as far as whether or not your loan is now converted to a grant or not. And that's how the process works.
Yes.
Okay, and we'll take just 2 more questions and then we'll end. This is like amazing. There is so much information and so many questions, but we have to end soon. So I'll give you a couple more. Someone is asking if payroll and FICA will qualify for the amount to be used in the calculation of the loan amount.
It's gross pay.
It's gross pay only.
It's where gross pay includes all your withholdings, let's say. So whatever that gross pay amount is, capped at 100,000, and then you add on health insurance, retirement contributions, state and local taxes. Take that number, divide it by 12, multiply it by 2.5, and that's how you calculate your loan amount.
Yes, I didn't read a whole question, but I think it was around employers' portion of FICA, the additional employers' portion, not the withholding only. Would the 50% of the company pays in Social Security and Medicare be included in that calculation? No.
No.
Okay. Great.
You can correct me. My understanding is the federal component does not get added back.
Right. The only thing that could be added to this is you take the wages, like an independent contractor, sole proprietor, whatever, who has employees. You have the payroll on one hand, and you have that Schedule C on the other hand that's being added to the average payroll for the average from the Schedule C to that, and you add those together. So that would be the only thing, including the employer.
Okay. Thank
you.
you.
There's confusion because, I'm sorry, Ramona. I was just going to say there were these original ADP reports that came out where they were adding on federal taxes onto that gross pay, and that had subsequently been revised. So there definitely was some confusion as far as whether or not you could tack on the employer's share of federal taxes. But I believe there were subsequent Q&As and clarifications that came out that said you're not to add back the employer's share of federal taxes onto the base that you're calculating your loan amount on.
Yes, no, that sounds right. I remember reading about that too. I believe for this one, this is for Peter, but this comes up a lot too. So if a company is paying contractors who are continuing to receive pay, can the funds from the PPP be used to cover the contractor payments?
Not employees. So
not employees.
Then they're going to have a loan. Then they're going to owe money, and it's yes, it's 1%, but it's only 2 years, so be careful.
Okay, great. This question is going to be the last one, and it was asked twice, so I'll ask it. Is there any penalties for prepaying the loan before the term is due?
No prepayment, no prepayment penalties, no balloon payments are allowed in any SBA loan.
Okay, great. So we're going to end the questions there. This has been very informative. I hope the audience got a lot of good information from this. Send your questions. Well, your questions are on the chat. We'll copy them over and see how much more we can answer via email or on our websites, the SBS website and other sites that we may make available for you. You'll receive a recording of this event within the next couple of days, so you can replay in case you miss anything. We appreciate all the questions. We really appreciate the time from the panelists and being able to, being willing to share and be put on the spot to answer some of these questions. That's huge. So thank you so much, Michael and Peter. And Peter, now you probably have to block me from your email, because the next time this happens, I'm going to be emailing you. So
thank you very much.
Now I have someone at the SBA. Thank you, guys. You're great.
Thank you.
I appreciate it.
Thank you, Ramona. Thank you, Michael. Really appreciate it.
Mm-hmm.